Now in your notes it mentions that controls have a function of either preventing misstatements before they occur, most effective, or detecting and correcting misstatements that have already occurred, which is less expensive to implement, but could be detected too late. So if you detect too late, they end up in the financial statements, which could be a problem. So that's what we're looking at as far as operating cycles. Now, with the cycles, we're going to look at a couple of different cycles: revenue cycle, expenditure cycle, and so on. Let's start out here with the revenue cycle. And the revenue cycle, let's think about, and for each cycle, what I want you to think about is what cycle are we in, what documents and what employees exist in that cycle, and then basically what are the strengths or weaknesses, what could go right, what could go wrong. So as we look at this cycle, the first question is, what's happening in the revenue cycle? Let's think about it. We got a lot of money, cash coming in. So cash is coming in because we're getting revenue because we're making a sale. So sales. And then when you make a sale, you have an account receivable. And then when you collect that account receivable, that's cash receipts. Cash has a lot of what kind of risk? Inherent risk. You need a lot of key controls. So in this cycle, we're going to talk about sales, accounts receivable, cash, receipts. And again, cash has a lot of what kind of risk? Inherent risk. Therefore, you need a lot of what? A lot of key controls. Okay, now, when we look at this cycle, what I want us to think about are what are the key documents. And if you look in your notes, you'll see it starts out, it says here the specific employees that are doing certain things, and we'll talk about the sales clerk, the credit manager, warehouse clerk, shipping clerk. We'll come back to those. But then it talks about some of the documents. Now, with all of these documents, the document should be PPN and multiple copies. What does it mean? PPN means pre-printed, pre-numbered, numerically controlled. If you look at your checks, on your check, aren't they pre-printed? Aren't they pre-numbered? Aren't you accounting for them numerically controlled? So if you're missing check, actually true story, someone broke into my office, and what they did, and they didn't actually break in. Someone left the door open. It was during working hours. So all of a sudden someone had said, hey, there was someone in your office, and I went in and they kind of said, oh, sorry, I was in the wrong place, and they left. And they looked around, they said, I didn't see anything missing. Well, then all of a sudden I get a call a couple of days later that I get a call from the bank. Someone was trying to cash a check, and they thought it looked a little strange. So they called me. I looked, and I had a checkbook in my room that I never used, and in the middle, 5 checks were missing. So what they did is they came in and they stole these 5 checks. They were not in numerical sequence, so that kind of raised a flag for the bank. So you're wondering, how does a bank know this? They weren't in sequence. The signature didn't match my signature on record. It was cashed at a bank in an area that I never bank in. So it was kind of weird. So what they did, called me, they didn't cash it, they didn't, they put a hold on it, they didn't clear, and so on. So that was really cool. But how do they catch a numerical sequence? So you could have same thing, other documents that are important, like a purchase order. You want to make sure, sales orders, you want to make sure that they're numerical sequence, so if something's missing, something doesn't make sense, then at least you have some kind of recourse. So we talk about pre-printed, pre-numbered, numerically controlled, and multiple copies. A lot of documents have 3, 4 different copies. So as we look at flowcharts later on, as we talk about strengths and weaknesses, you're going to watch the copies. One copy goes to this department, one copy goes to that department, and so on. You're going to want to keep track of where the documents are going. So in this place, in this cycle, we're going to make a sale. So the first thing we do is we get a customer purchase order. So the customer sends in this purchase order, makes a phone call, whatever. That triggers this cycle. So it triggers the cycle, it triggers the sale from the customer. That comes in from the customer.